I just got done spraying the brush inside of the barn. So I sprayed glyphosate to get rid of the brush that's inside of the barn. And I'm out here on the new on the ranch, the second ranch, and I was taking a look at my test plot to see if the ryegrass had germinated. And you can actually see the ryegrass seeds still sitting on top of the soil. And so it didn't really germinate. I do have some brush type of grass, or not a brush, but this is some kind of just a prairie grass is what they call it here in this area. They call it prairie grass, and I got some prairie grass coming in. But the ryegrass, it doesn't really seem to be germinating. I still see the seeds sitting on top of the soil, and so that's I'm not going to be spending any money broadcasting ryegrass if it's not going to germinate, right? And so that's good. I got some information. I took a look at it, and I'm not going to be broadcasting ryegrass. But you can see that this is the pole where I marked the three sides of the triangle. And I just don't really see any ryegrass coming in. So, and also the thing about grass seed is that if it sits on the soil for too long, it will actually start to rot. So, yep, I'm not going to be broadcasting a ryegrass seed. What I am probably going to do is I'm going to take that money and maybe I'll put Duracore on this field. I'm still considering that. I still got like brush like this. I still got a lot of brush in here, and next week it's supposed to be getting pretty cold, and so I got to think about maybe I'll put Duracore on this field. I'll go over this field and I'll fertilize this field using a Duracore coated fertilizer granules. And that may get rid of all these weeds, keep these weeds suppressed. The cold weather might kill them, and then the Duracore might keep the weeds suppressed and let the grass grow in. And so I was taking a look at everything this morning, and I'm going to talk about my finances. I was taking a look at everything this morning, and okay, so in terms of like a monetary standard, in terms of like if we're going to talk about money, the thing about money right now is that, okay, so if I were going to describe it in terms of a numerical context, I've been investing maybe about on my capital that I invest maybe about 40 grand, right? I invest about 40 grand, and then on that 40 grand I make about $60,000 to $80,000 a year of net profit, right? And so I'll be investing I've been investing about 40 grand, and on that 40 grand that I invest over the course of a year, I would make about $80,000, right? And when I take a look at everything that I'm doing right now in terms of my finances, in terms of my numbers, my money, it's going like this, right? And at first when my money starts going up, and it starts going up on a scale, on a percentage basis, when I first start generating that first $60,000 to $80,000 a year of net profit, you don't really, it doesn't really, in terms of my personal life, it makes a lot of difference, because it's like, oh, now I have an excess of money, and now I can do whatever I want. I can go and buy more land, etc., etc. I can do whatever I want, right? But in terms of the amount of money being generated, here is how I would describe it. So up until now, I've been investing about $40,000, and for that $40,000, I've been making about $80,000, $60,000 of net return. I've been netting a return of about $60,000 to $80,000 on that 40 grand. And this is what I mean by compounding growth. When I have 40 grand and I make 60, 80 grand, if I reinvest all of my money, I'm not going to be investing 40 grand. I'm going to be investing 120. And so, if you think about it in terms of a numerical context, my 40 grand, I'm not going to be investing 40 grand anymore. I'm going to be investing about 120. And if you think about things in terms of a numerical context, at 120 grand, if I make my money on 120 grand of investment, then I will be compounding my growth. And so it's like instead of 40 grand, I would have 120. And then if I invest in my 120, instead of 120, I would have whatever, right, 250, etc., right? And so if I think about compounding my growth, the money scale, as of right now, it's been going like this, right? But I've hit. I believe that I have hit in terms of like, if we were going to talk about it in terms of a graph. Here's some sandy soil right here. If we were going to talk about it in terms of a graph, imagine that I start here, right? And I start going like this, and the curve looks like this. The curve is it's not a straight line. It's like a curve, right? And I believe that when I take a look at it, I'm like right here. I'm about right here. And so my money is about to go vertical. The amount of money that I generate is going to go vertical. And I when I take a look at financial things and things like that, I mean, people talk about this, but it's like after a certain point your money goes vertical. And in terms of my life, that's what I foresee happening. When I take a look at it in terms of a logical context, that's the way that I see it. I was actually thinking about this, but here in maybe about a year or so, in about 365 days, I'll actually be buying myself another piece of land. I think that so I told myself that if I'm in a situation where I have $100,000, if I have 100,000, these are the criteria that must be met for me to go and buy myself a new piece of land. Which I believe that I will reach these goals. I believe that I will. And so when I hit $100,000, if I'm in a situation where I have $100,000 and the tax purposes and etc., if I don't reinvest the money, I'll have to pay a boatload of taxes. I have 100 grand and I'm about to reinvest 100 grand, and if I reinvest that 100 grand, and when I invest that 100 grand, I stabilize my investment, and I logically foresee that my investments are going to go up in value. All right, if I logically foresee that my investments are going to go up in value, I've stabilized my assets, etc., and then I take a look at it for what it is, and I say, within the next about 6 months, I believe that I will have about 225 grand, and things are lining up, and I believe that I will have 225 grand within 6 months, and if I have 225 grand, and I make that money, and I'm gonna have to pay $90,000 that year in taxes, then I will just go ahead and buy myself a new piece of land so that I can reinvest my earnings. That's how I foresee that things are gonna happen. In terms of a monetary idea, the amount of money that I am generating is actually going exponential. I am generating a massive amount of money, and when I take a look at it for what it is, I mean, I would say that within probably about a year, within about 365 days, I will actually be in a situation where I have about $100,000, just $100,000 liquid. And if I have $100,000 liquid and I invest that money, and I stabilize my investment, and I believe that with my $100,000 investment, I will make a return of $125,000 net on that 100 grand, $100,000 net on that 100 grand, and I foresee that, and I logically anticipate that is going to happen, right? I objectively, correctly believe that is going to happen. Then I will go and buy myself a new piece of land, and I believe that at that point I will buy myself a new piece of land so that I can reinvest my earnings. I can tie the land up on an option contract. I can tie the land up on a non-payment agreement for about a year, 9 months or so, and then just reinvest my money, go and make my money. And once I make my money, I can go and do whatever it is that I need to do, right? And so that is what I believe is going to happen. As of right now, I believe that I have kind of hit like this critical mass point where it's like my the amount of money that I make is about to go exponential. I believe that I have hit that kind of inflection point. I believe that that is what they call it. I'm about to hit an inflection point, and when I hit that inflection point, the amount of money that I make is just going to go astronomical. And I've already talked about this in terms of money, but in terms of money, I already make enough to do whatever the heck I want. The idea of, to me, money is just, it's kind of negligible. If I wanted to sit around on a 10.5 or whatever, acre field for the rest of my life and just make, $140,000 a year, $200,000 a year, I could do that. I mean, that's not a big deal, right? I mean, even then, I would have enough money to do whatever the heck I want. But in terms of just a numerical idea, the amount of money that I am going to be making is going to go vertical. And I actually believe that within 365 days, I will have about $100,000 liquid cash, and I will have invested that money. And when I have invested that money and I have stabilized my investment, I believe that my investments are stable. I've taken a look at my investments and I've objectively considered them for what they are, and I believe that they are stable. And if I invest 100 grand and then and I make 200 back, then at that point, it would be in my best interest to just go and buy a new piece of land so that I can buy more cattle and invest my earnings. And if I invest my earnings, I can reduce my income tax burdens. And so, I believe that, I'm actually going to be buying a more piece of land or another piece of land here very soon. Not very soon, but within a year. There are certain criteria that need to be met, but when those criteria are met, I can go ahead and buy myself a new piece of land. And so I think that but that's what I got going on. I was taking a look at my numbers. I was taking a look at the money that I'm making. I was taking a look at everything that I got going on, and in terms of a reality situation, I believe that within probably 365 days, I will have about somewhere between 50 and 100,000 cash liquid, and then I'll be investing that money. And when I invest that money, if I anticipate that I'm going to make something like a net profit of about 100,000 on that money, I would be getting that money back too. And so if I go in the net positive about $150,000, $200,000, I'm just going to go ahead and buy myself another piece of land. And if you think about it in terms of the idea of the inflection point, and why the idea of the money hitting a critical mass, and why the amount of money that I'm going to make is going to go vertical. If you think about it, think about it this way. It took me I believe that I'm at an inflection point with money, and the amount of money that I'm about to start making, the amount of money that I'm going to make is going to go vertical. It's going to go exponentially higher than anything that I've ever made before in my entire life. And I believe that within probably about 365 days, I will actually be looking at. I will be maybe in the net positive about $150,000 to $200,000. And when I go net positive about $150,000 to $200,000, I'm actually going to go ahead and buy myself another piece of land. And so that's the big idea right now. With this piece of land, I'm going to make as much money as I can. This is not my end-all, be-all. When I take a look at it for what it is, the money that I'm going to make is just going to go vertical. I'm about to make a boatload of money. And in terms of money, and I talk about this, you know, the whole, you know, when I talk about money, I always, you know, put emphasis on these ideas that it's like, you know, you shouldn't be worried about how much money I make. At the end of the day, if I only even made 10% of the money that I do, I could still have enough money to do whatever the heck I want. You know, in terms of a monetary standard, when you take a look at how much money I generate, I mean, we're talking about a 0.0000001 percentile. I mean, you know, you're not going to be able to, I mean, if you wake up one day and you just said, I want to go and make money like this guy, you're not going to be able to do it. I give you all of the information for free. Everything that I do, I give you the information for free. And why do I do that? You know, with the utmost sincerity of my existence, I'm just looking to give you the best information that I can. And, you know, but deep down, I understand that it's like, if you're not willing to do the work, then you're not going to get the results. There is no way that you can skip the work. It doesn't work like that. If you think that you can skip the work and you can just go and make yourself money, you're going to end up throwing yourself off a cliff. It's not going to work. And so, you know, and I always say these different things, and I give ideas like, you know, it's like, if you fundamentally understand that if you risked about $1,000 a month, you could give yourself a raise of about $4,000 a month. You could actually net yourself about 50 grand a year if you just risked $1,000 a month, but you actually took the time to do your due diligence, and you actually followed the steps, and you actually did things properly, and you did things, you know, and why am I saying these things? Because, you know, the whole idea is like the ant with the ink barrier, right? If you're an ant behind an ink barrier, if you cross that ink barrier one time, you will never see the ink barrier as a barrier again, and you will just go across the barrier like it is not even there, right? And so that's the big idea. It's like, you know, I'm giving you the best information that I can, and, you know, doing, you know, with the utmost sincerity, doing the best, you know, giving you the best information that I am capable of giving. And, you know, when you actually take a look at it, it's like you're at a risk for about $1,000 a month. And when you risk that $1,000 a month, if you actually do things properly and you start investing, then, you know, you can actually net yourself a return of about $4 grand a month if you do things properly. You should not be skipping the steps. You need to make sure that you really thoroughly understand the details, understand your deal. And if you actually take a look at it in terms of a fundamental idea, why do I put such an emphasis on investing? I put such an emphasis on investing because if you do not invest, your chances of becoming financially successful in America are practically borderline 0%. If you do not invest, you are probably going to die poor, right? I've talked about this in terms of a broader idea. You know, the idea of investing is that if you do not invest, you're effectively just going to die poor, more or less. I can almost guarantee it. You know, and the whole idea of investing is that if you really understand your investment, and if you really understand your investment and you really done your due diligence, and you take a look at what you're doing, and you understand what you're doing to a fine detail, then, you know, you're really not at risk for anything. You're actually more at risk of not doing it than doing it, if you really think about it. I mean, because it's like, you know, if you really understand your investment and, you know, you've really done your due diligence on your investment, and you're at risk for, you know, whatever, $1,000 a month, and for that you can net yourself an extra $4,000 a month, $3,000 a month, whatever it may be, and you do that 3 or 4 times, and if you do that 3 or 4 times, you're effectively gonna, you know, you already make so much money that you can do whatever you want, right? And so I talk about all of these things in terms of a broader idea. You know, if you don't invest, you're actually more at risk of just living a horrible, miserable financial life. You're better off investing. I can, you know, granted that you actually follow the steps and you actually do your due diligence, and, you know, you actually, you know, understand your investment and all of these various factors. You cannot skip any steps. Make sure you're actually checking what you're doing. Look at what you're doing, and, you know, go through it 5,000 times. You know, check the details of your investments, etc., etc. You know, the idea of money is not to go and YOLO it, and, you know, you should not sell your, I would highly suggest that you don't sell your soul to the devil. If you sell your soul to the devil to make money, it never works out, and etc., etc., right? I talk about all these different things. So, you know, that's how I see it. All right, that's how I see it, and I do very well for myself financially. You know, I'm gonna make as much money as I can here, and I would say that within 365 days or so, I will actually have put myself in position to buy another piece of land. And I was actually thinking about this, and I was like, if I'm gonna, well, when I go and buy myself a new piece of land, you know, when I go net positive a couple $100,000, you know, when I accomplish that, it won't take me very long. But when I do that, you know, where do I want to buy this piece of land? And so this piece of land that I purchased, one of the reasons that I purchased this piece of land was because it's between three cell barns, three major cell barns. There's a cell barn to the east of here, and then there's two cell barns to the west of here, and they're all within about 40 minutes away from this property. And so that was one of my strategic reasons for why I purchased this field. And I think that when I go and I purchase a new field, I'm actually going to maybe go up to the a little bit more to the northeast or so to put myself in between different cell barns. And so I'm going to utilize this property to accumulate cattle from the cell barns in these areas, in this area, and then I'm going to go to a different location. And if I need, if I believe that I can accumulate more cattle in this area than this land can hold, then I can buy a new piece of land in this area as well. But I believe that my next strategic investment is going to be to the northeast. I believe that if I go to the northeast, I can position myself between good cell barns over there too. And if I position myself over there between good cell barns, and I'm over here between good cell barns as well, then I have access to hundreds of cattle, right? Hundreds of cattle every month. And so, you know, I've been thinking about where do I want to buy a new piece of land. You know, what are going to be the details that need to be met for me to do this project, and et cetera, et cetera. And that's what I believe. When I go net positive about $150,000 to $200,000 cash, and I'm in a situation where I'm going to reinvest that money, and if I reinvest that money, I'm going to make a positive return, a substantial positive return, and I invest that money and I stabilize my assets, I stabilize my investments are growing and things are doing good, then I will, at that point, I will go and buy myself a new piece of land. And if I believe that I can accumulate more cattle in this area, I can buy another piece of land here. If I believe that I need to go to a different area to accumulate cattle more effectively, then I can purchase a piece of land in a different different area in the northeast. And so that's kind of like the big idea of where do I see myself going over the next year. And so you know, that's kind of the big idea. And you know, as of right now, in terms of a monetary idea, the amount of money that I'm generating is hitting an inflection point, and I'm actually about to go vertical. The amount of money that I make is about to go vertical, and so you know, I just gotta keep track of things, stay on top of things, due diligence, and in terms of me giving information and all of these different things, you know, I'm not a malicious individual. I'm not giving you the wrong information on purpose with the intentions of leading you the wrong way or anything like that. I'm not looking to do anything like that. You know, the big idea with me is that I'm looking to give the best information that I can, right? You know, I'm not giving you the wrong information on purpose with the intentions of having you, you know, mess up, and you know, I don't get a kick out of it. If anything, when I take a look at it for what it is, you know, I would be much happier seeing everybody succeed than seeing everybody fail. God knows it, I know it. You know, I'm being as honest, sincere as I can. There is no, you know, no, I'm not out here to see people fail, right? You know, if anything, I would like to see everybody succeed. You know, I've always said that I'm not like your mom or dad, right? I'm not your parent. You know, I'm not gonna sit here and you know, and hold you like a dear little baby, right? I mean, if anything, you know, none of you are gonna make it, and you know, et cetera, right? You know, I'm not your parent. You know, I'm not gonna, you know, treat you like you're the most special thing on the entire planet, because to me, everybody is effectively average until you've made yourself into somebody. And so the big idea with all of this is that, you know, when I give information, you know, I would highly suggest that you know, you got to learn to invest. You have to learn to invest. If you don't learn to invest, I mean, your life is going to be very difficult financially, practically forever. you really want to learn how to invest, understand your investment, make sure you do your due diligence. You're not being an idiot, right? I mean, you're not going to go and invest in something, because, and then be an idiot and then lose all your money, etc., right? I mean, it's not gambling, it's investing, right? You're trading your money for something that is equally as valuable as the money. And when you do so, that investment that you make should be equitable on a very large market basis, right? There's a very large market for your investment. It's deemed to be equitable because it's valuable to other people and not just you, etc., right? I mean, it makes a positive return, and you have an idea on how to appreciate it profitably over the longer term, etc., You've come up with a realistic plan. You've taken a look at it, and you've gone over the details 5,000 times. You're not you're not going to throw a Hail Mary into the middle of nowhere for no reason, etc., right? I mean, and then when you do that, and when you do it properly, you're really at risk for almost nothing. I mean, you're actually probably more at risk of losing money if you don't do it than if you do it. And so at that point, and then move forward with your investment. And then, don't be a poor person, right? I've always said you don't want to end up as a poor person. If you end up as a poor person, it's practically a done deal. At that point, it's if you end up becoming poor, I mean, it's practically a done deal. If you're broke, it's not that big of a deal, but if you're poor, it's not good. I mean, it's real bad. I mean, you're practically probably going to die that way. And so, etc. There's make sure to follow the details, understand the details, understand what you're doing. Look for a good investment, buy good assets, don't buy bad assets for cheap prices, because there is no reason to buy a cheap asset, for a bad bad asset for a cheap price, because at the end of the day, your asset is going to pay for itself anyway. So there is no reason to go and buy damaged assets for low prices. You should buy a good asset for a decent price, because at the end of the day, your asset is going to pay for itself anyway, right? It makes a positive return as it is. It will make a positive return. It's equitable. It makes a positive return, and and you have an idea of how to appreciate it knowledgeably over a long period of time, then you're really not at risk for anything. You're more, granted that you're not an idiot, because, I've always said that at the end of the day, if you act like an idiot, you're going to lose all your money. It doesn't matter. It doesn't matter. And so, you got to think about it for what it is. Make sure you check everything 5,000 times. Make sure you understand the details. What are you doing, and etc., right? And then at that point, you should move forward with your investment. And you should not be worried about making $1 million. You should not be worried about making $10 million. In reality, if you could just get your income up to about $10,000 a month, if you can get your income up to about $10,000 a month, where you're generating about $10,000 a month, you effectively, at that point, granted that you don't be an idiot, if you bring home about $10,000 a month, you effectively make enough money to do anything on the entire planet. All right, you should not. I would highly suggest that you don't worry about making $1 million. You don't need to worry about making $1 million. You don't need to worry about making $10 million. If anything, you need to think about finding your peace with God. Be in good graces with God. All right, I've always said it's very important. You should find your peace with God. You find your peace with God, and you find a way to make yourself $10,000-$12,000 a month. You can effectively do anything on the entire planet as of then. You don't need to worry about making $1 million. You don't need to worry about making $10 million. Nothing like that. Just raise your income. Find your peace with God. Don't be an idiot. And then congratulations, you can do whatever the heck you want, right? And so that's it for me today, YouTube. Y'all have a good one.